Still paying $202.90 a month for Medicare after 65? Millions don't have to. I checked the Social Security Administration and the Federal Medicare Agency. These rules are real. Here are the 5 bills: your property tax, your Medicare premium, your heating bill, your prescriptions, and your groceries. Let's go. My name is Eric. I'm going to walk you through all 5 of these bills in order, show you the federal rule or state program behind each one, and end with a 1-page action plan so you can start asking the right questions this week. Bill 1 is your property tax. It's the bill that never retires. Your paycheck stopped, your mortgage may be gone, but the county keeps sending that envelope every year. And in most of the country, the number inside keeps climbing, while your income stays flat. For a retiree on a fixed check, that envelope is the scariest piece of mail of the year. Because behind it sits the one fear nobody says out loud, which is losing a paid-off house over a tax bill. What most homeowners over 65 have never been told is that nearly every state runs some form of senior property tax relief, and almost none of it happens automatically. You have to ask for it by name. Take Texas. Section 11.13 of the Texas Tax Code requires every school district to knock $140,000 off the taxable value of your homestead. And the same section adds another $60,000 off for homeowners who are 65 or older. Stack those, and a Texas homeowner past 65 is shielding $200,000 in value from the school portion of the bill, which is usually the biggest line on it. On top of that, Texas freezes the school tax itself once you qualify. The county issues a tax ceiling certificate, Form 50-311, and from that point, the school district generally can't collect more than it did in the year you qualified, unless you add improvements to the home. Florida runs a different flavor of the same idea. The standard homestead exemption there cuts the taxable value of a primary residence by as much as $50,000, and many Florida counties have adopted an additional exemption for homeowners 65 and older who live on a limited income. North Carolina runs an exclusion that removes a chunk of appraised value for qualifying seniors, and Arizona offers a senior freeze that holds assessed value in place. The names change at every state line, but the pattern is the same. Let me show you what that looks like with real numbers. Picture a retired widow in Texas whose house is appraised at $300,000. Say her school district charges about 1% of taxable value each year, which is a common ballpark for that part of a Texas bill. With no exemptions on file, the school piece alone would run somewhere around $3,000 every single year. Now she files her homestead paperwork and her over 65 application with the county appraisal district. $200,000 of value comes off the school calculation, leaving $100,000 on the table, and the school piece drops to roughly $1,000. That's about $2,000 staying in her checking account every year, and the ceiling certificate means that piece of the bill is frozen going forward, even if rates climb for her neighbors. Here's the catch. None of this finds you on its own. You must file. There are deadlines, and some pieces carry income tests, like the Florida Senior Add-on, which counties apply with an income limit the state adjusts each year. The filing itself is free at your appraisal district or property appraiser's office, so if an official-looking letter arrives offering to secure your exemption for a processing fee, set it aside and call the county directly instead. The Texas freeze covers school taxes statewide, but city and county portions are frozen only where those local governments have opted in. And if you've been eligible for years and never filed, ask whether your state allows a look-back, because some do. Renters, don't go anywhere either, because everything from Bill 2 on applies whether you own or rent. This is on the Texas Comptroller's Property Tax Exemptions page and the Florida Department of Revenue's Exemptions page, and your county assessor can tell you in one phone call which of these applies to your address. Bill 2 is the Medicare premium that comes out of your Social Security check before you ever see it. In 2026, the standard Part B premium is $202.90 a month, up almost $18 from last year, and for most retirees, it's simply deducted from the check. You never write the payment, so it never feels like a bill, but over a year, it quietly removes more than $2,400 from your household, and for a couple, it's double that. Every January, when the cost of living raise lands, a slice of it disappears into that premium before it ever reaches your groceries or your gas tank. What the Federal Medicare Agency confirms, and what most retirees have never heard said plainly, is that there are programs that pay that premium for you. They're called the Medicare Savings Programs. They're run by your state's Medicaid office under federal rules, and they come in three main levels. The first level is the Qualified Medicare Beneficiary Program. For 2026, the income line sits at $1,350 a month for a single person and $1,824 for a married couple. And those figures already include a small disregard, meaning the first bit of monthly income doesn't count against you. Qualify there, and your state pays the Part B premium, any Part A premium, and your Medicare deductibles, co-insurance, and co-payments too. Federal law goes further and bars doctors, hospitals, and pharmacies from billing you for Medicare cost-sharing at all once you're in that program. That is the rule. The second and third levels, the Specified Low-Income Medicare Beneficiary Program and the Qualifying Individual Program, reach higher incomes, up to roughly $1,816 a month for a single person at the top level. And they pay the Part B premium itself. There's an asset test in most states, just under $10,000 for an individual and just under $15,000 for a couple. And your home, your car, and your burial funds generally don't count toward it. Let me walk one scenario end to end. A retired widow lives on a Social Security check of about $1,500 a month and nothing else. She assumes she earns too much for any help, so she has never asked. Her income is above the first level's line, but comfortably below the top level's line, so her state approves her at one of the higher tiers and begins paying her Part B premium. Her monthly check grows by $202.90 because nothing is deducted anymore. Over a full year, that's $2,434.80 back in her hands, without touching her savings and without a penny of new income. Look at your own numbers against those lines right now, because the mistake almost everyone makes is disqualifying themselves at the kitchen table. Roughly 1 out of 8 people on Medicare is enrolled in the strictest of these programs, and some states set their income lines higher than the federal floor. So a no in one state can be a yes next door. If you applied years ago and were turned down, apply again, because these income lines move with inflation every year, and the answer can change without your life changing at all. The limits I just gave you come straight from the Social Security Program Operations Manual for 2026. And the premium figure comes from the Federal Medicare Agency's own premium notice. So when you call your state Medicaid office, ask for the Medicare Savings Programs by name, and they'll know exactly what you mean. Bill 3 is your heating and cooling bill. Utilities are the bill retirees are most likely to ration, and that's the polite word for holding the thermostat at 62 in January, or letting the house sit at 90 in August, because you're afraid of what the meter is doing. A hard winter can push a monthly heating bill past a few $100s, and doctors will tell you what rationing heat does to an 80-year-old body. The federal government has run a program against exactly this problem for decades, and it remains one of the least claimed benefits among older homeowners and renters alike. It's the Low-Income Home Energy Assistance Program, run by the Department of Health and Human Services through your state, and you may hear a caseworker pronounce it LIHEAP. The federal program page says it plainly. It assists eligible low-income households with managing and meeting their immediate home heating and cooling needs. In practice, it does 4 things. It puts money toward your regular energy bill for the season. It provides emergency help, which can stop a shutoff or get heating fuel delivered when you're down to nothing. It funds weatherization, meaning insulation and ceiling work that cuts the bill permanently. And it can cover minor energy-related home repairs, like a furnace that's about to fail. Around 6.7 million households get help from this program, and the Department of Health and Human Services estimates the average value of a heating assistance grant at $662. The eligibility line is wider than most retirees ever assume it could be. Your household income can be as high as 150% of the federal poverty guideline, or 60% of your state's median income, whichever route your state uses. And for a 2-person retired household, that lands in the low to mid 40,000s in many large states. Let me make that concrete. A retired couple heats a small house through a northern winter on a combined Social Security income of about $38,000 a year. They've never asked for help because they assume energy assistance is welfare meant for someone else. In state after state, that income lands under the line. They apply through the local community action agency in October, before the season fills up. The seasonal grant, at the national average, takes $662 off their winter bills. And because their furnace is limping, the office schedules a weatherization visit that tightens up the house and shaves every bill after that. If February brings a shutoff notice anyway, the crisis side of the program exists precisely for that phone call. Now the part most retirees miss. This money is a federal appropriation that runs out. States open applications in the fall. Many run first come, first served. And when the season's funds are spent, the window closes until next year. Mark the fall opening date on the calendar, the way you'd mark a doctor's appointment. Because the difference between applying in October and calling in February can be the entire benefit. The people who get help are the ones who apply in October, not the ones who call in February holding a disconnection notice. And this isn't charity you're taking from someone needier. It's a program your own taxes funded for decades, sized every year by Congress, and the referral line exists to be used. The National Energy Assistance Referral Line and the National Council on Aging's Benefits Checkup Tool will both route you to the office that handles your county. This is on the Federal Administration for Children and Families program page, and the National Council on Aging keeps a plain English rundown of the income rules with current numbers. Before I show you the last 2 bills, which carry the biggest dollar figures of the day, one thing needs saying plainly. This video is for educational purposes only and is not tax, legal, or financial advice. Talk to a qualified professional before making any decision about your specific situation. If what I'm showing you is useful, hit the subscribe button and the notification bell. That's what tells YouTube to push this kind of plain English retirement walkthrough to more of the retirees who need it. And if you want the one-page checklist version of this episode, with every program name, every income line, and every phone number I mentioned today on one printable sheet, the link in the description has the 5-bill checklist waiting for you. Bill 4 is what you hand over at the pharmacy counter. Prescription costs are where retirement budgets go to die quietly, because nobody plans for the second and third medication that gets added in their 70s, and the co-pays arrive every single month, whether the furnace works or not. Plenty of seniors split pills or skip refills to stretch the month, and they never mention it to their doctor or their kids. Social Security runs a program aimed squarely at this bill, and it's one of the most underused benefits in the entire federal system. It's called Extra Help. The formal name is the Low-Income Subsidy for Medicare drug coverage, and Social Security's own page puts its value at about $5,300 a year for each person who qualifies. That's not a loan and not a discount card. The program pays the monthly premium on your drug plan, pays the annual deductible, and caps what you pay at the counter to small copayments. The income line is wider than the word subsidy makes it sound. As the rules currently stand, a single person with income up to roughly the mid-20,000s a year can qualify, with a resource test that ignores your home, your car, and your burial arrangements. Some people are signed up automatically, but here's the part that matters for everyone else. You don't need to be on any other assistance program to get this. You can qualify on income alone, straight through Social Security, with one application. Walk through what it means in practice. A retired machinist takes 4 medications, 2 of them brand name, and between his plan premium, his deductible, and his monthly copays, he has been draining hundreds of dollars a month from a check that was supposed to cover everything else too. He applies for extra help and qualifies. The program takes over his monthly plan premium, the deductible disappears, and each refill costs him a small fixed copayment instead of a share of a brand name price. Using Social Security's own average, the program is now covering about $5,300 of drug costs a year that used to come out of his pocket, which works out to more than $400 a month of bill that simply stopped being his. The application is Form SSA 1020, and you can file it online at Social Security's website in about half an hour, by phone, or at a local office. Now the catch, and it's the good kind. Most people who skip this application assume the resource test will sink them because they have some savings. Check the numbers before you decide that, because the allowed resource limits sit in the tens of thousands of dollars and the exclusions are generous. And the same form works twice. When you file Form SSA 1020, Social Security also sends your information to your state to start a Medicare Savings Program application, the exact program from Bill 2, unless you tell them not to. 1 half-hour form, 2 of the 5 bills in this video. This is on Social Security's Extra Help page and the Form SSA 1020 page at Social Security's website. Bill 5 is the grocery bill. And before you decide this one isn't for you, stay with me for 2 minutes, because the numbers on this program embarrass every stereotype attached to it. The Supplemental Nutrition Assistance Program is the modern food benefit that replaced what an older generation called food stamps. And the National Council on Aging, a national nonprofit devoted to older Americans, reports that approximately 3 out of 5 seniors who qualify for it are missing out. An estimated 5 million people. 5 million. These aren't people gaming a system. These are widows and retired couples paying full price for groceries while a benefit they earned sits unclaimed. Mostly because they assume it isn't for them, or they remember a version of the program that no longer exists. The money loads monthly onto a plain debit-style card that works at the grocery register. For older adults, the average benefit runs $188 a month, which works out to $2,256 a year. And even the minimum benefit, small as it is, stacks with every other program in this video. Picture a widow in her late 70s, living alone, which describes most seniors on this benefit, since roughly 85% of older recipients live by themselves. Her Social Security check covers the house and the utilities with almost nothing left over. And she has quietly downgraded what she eats, which her doctor notices before she ever says a word. She applies through her state, gets something near the average, and $188 a month starts arriving for food. Over a year, that's $2,256 of groceries she is no longer paying for, out of a check that was never big enough. Here is the part that changes the math, and it's the twist hiding inside this last bill. The program lets older adults deduct out-of-pocket medical costs from their counted income, things like premiums, prescriptions, and mileage to appointments. And the National Council on Aging reports that only 16% of older adults use that deduction. Barely 1 in 6. That deduction is the difference between a denial and an approval for a huge number of retirees. And it's the difference between the minimum benefit and a real one for many who are already enrolled. which means the household that heard no 2 years ago, before the medical bills grew, might hear yes today. If you take one sentence from this entire video, take this one. Run the numbers with the deductions included before you decide you don't qualify for anything. The application runs through your state's benefits office, and the National Council on Aging's free benefits checkup tool at benefitscheckup.org will screen you for this program and dozens of others in about 10 minutes with a zip code and a few honest answers. This is in the National Council on Aging's published fact sheet on older adults in the nutrition program, updated this past November. Here is your one-page action plan. 1. Call your county appraisal district or property appraiser. Ask which senior exemptions and tax ceilings apply to your home. And in Texas, ask about the tax ceiling certificate, Form 50-311. 2. If your monthly income is under about $1,800 for a single person, call your state Medicaid office and ask about the Medicare Savings Programs by name. 3. File Form SSA 1020 at Social Security's website, because that one application covers extra help and starts the savings program check at the same time. 4. Call the Energy Assistance Referral Line at 1-866-674-6327 before the fall season opens. 5. Run your zip code through the National Council on Aging's benefits checkup tool to catch anything else your household qualifies for. $202.90 a month back in the Social Security check. Roughly $2,000 a year off a Texas property tax bill. $662 toward the heat. $5,300 a year at the pharmacy. $2,256 a year at the register. Same retiree, same house, same income. The one who never asks pays every one of those bills in full, forever. The one who asks may stop paying most of them this year. Next on this channel, the Social Security mistake that shrinks your check for life. Tell me in the comments which of these 5 bills you're still paying and whether anyone ever told you that you could ask. I read every single comment, and the most common questions become future videos. I will see you in the next.